Good afternoon. My name is Tom Toft. I'm with the West Michigan Low Income Taxpayer Clinic. And today, December 27th, 2023, I'd like to talk about Michiganders missing out on tax credits. And in particular, we'll be talking about the homestead property tax credit and the home heating credit. Now, before we get started, I want to say that this is not legal advice. Nothing in this presentation is a substitute for a private consultation with an attorney regarding a legal problem. The information in this presentation relates to the current state of tax law. Tax laws can change. Now that we got that out of the way, let's continue. What are tax credits? Credits are incentives and promotion of public policy. Credits can reduce the amount of tax that you owe, or they can increase your tax refund. Some taxpayers may get a refund even if they don't owe any tax. And many credits help lower income people. There are two Michigan tax credits that many don't claim, though they qualify. The homestead property tax credit and the home heating credit. The reason I'm presenting this is because every year I run into a number of people who could have claimed these credits but didn't. So why do people miss out on the homestead property tax credit and home heating credit? First, people that rent might mistakenly think that only homeowners qualify for credits, so they don't try. That is, I have folks that come in that could have qualified for these credits, but because they rented, they just thought that they couldn't qualify at all and never tried. Secondly, people with no taxable income don't file tax returns and never realize they might qualify for credits, so they don't try. What we'll be talking about in the next slides are how there are what's called total household resources, which is something different than taxable income. So I've had people come to me who have had money, they've had benefits, they've had income coming in, but it wasn't taxable. So they didn't file tax returns and didn't realize that they could file just for these credits. And third, people file to claim credits, but then they don't properly reply to letters from the Michigan Department of Treasury asking for additional information, letters reducing or denying the credit, or letters seeking to verify identity. If you get such a letter from the state and you don't respond, you'll get no or lesser credit. And I run into folks like this every year and wanted to let everyone know about this situation. The homestead property tax credit. This helps qualified homeowners or renters pay some property taxes. Does someone qualify? To find out, you can use Homestead Property Tax Credit Claim Form MI 1040CR. The MI 1040CR is the Michigan Department of Treasury form number that is used to claim this credit. Now, for most people, the credit's based on comparing property tax amount to total household resources. Household resources are different than taxable income. Homeowners pay property taxes directly, and the theory behind renters paying this is that renters pay property taxes indirectly with rent. Think of it this way. If you pay rent to your landlord, and then your landlord uses that rent to pay the landlord's property taxes on the unit you're living in, where does the money actually come from? is actually coming from the renter. It is under this theory that the credit is available to renters if they meet all qualifications. Now here at the bottom of this page, I have a link which will take you to a state site that has information on all the qualifications. I must note that just because you rent doesn't mean that you will qualify. There are other qualifications and some special circumstances depending on if your landlord pays property taxes, if you get aid in paying for your rent, how much aid, things like that. But again, as I mentioned earlier, I have renters every year that come to us. They could have claimed this, but they just didn't because they didn't realize that they might have qualified for it and didn't even try. So just be aware that renters can claim these homestead property tax credits if they qualify for it. So definitely check out that link at the bottom of this page. The home heating credit helps Michigan homeowners or renters pay heating expenses. Again, renters can also try to qualify for this credit. It helps people who are low income, deaf, disabled, or blind. Does a taxpayer qualify? Use a home heating credit claim form, MI 1040 CR7. So the Michigan Department of Treasury form used to claim this credit is the MI 1040 CR7. For most people, this credit is based on comparing total household resources, which again is different than taxable income. And we'll talk about that in a second. So it's comparing total household resources against a standard credit allowance or actual heating costs. Now, there are other qualifications to this. So at the bottom of the page, I provided a link. I would encourage anyone that is wondering if they might qualify or not to go to that link and kind of review all the different qualifications and special situations. Now, in the previous two slides, I mentioned total household resources and how it's different than taxable income. Total household resources are used to determine eligibility for the homestead property tax credit and the home heating credit. Total household resources are the total income, both taxable and non-taxable, of both spouses or of a single person maintaining a household, excluding net business and farm losses, net rent and royalty losses, and any carryback or carryover for net operating loss. This is the big thing I see. Social Security benefits, supplemental security income, and alimony, things like that, they count towards the credit qualifications. I've dealt with a number of people who've had Social Security benefits or alimony. They don't file tax returns, but then they think, well, I don't file returns. It doesn't even dawn on them to see if they might qualify for the homestead property tax credit or the home heating credit. The qualifications, again, they take into something called total household resources, and it's a much broader list of things the state includes. It's important to remember that, say you just get Social Security benefits or supplemental security and it's not taxable and you're not filing returns, well, you might be able to qualify for these household resources. At the bottom of this page, I put a checklist for determining the total household resources. So if you're not sure, you can go to this link, see if the type of income you have is considered for the type of resources used for determining these credits. And if so, then on the previous slides, you can go to those links that give more information about full qualifications, and maybe you'll qualify. All right, let's go on to the next slide. There are common letters that indicate a problem after filing for credits. If you don't respond to these, then your credit's going to be denied or greatly reduced. There is a request for additional information. The state sends a lot of these letters, and these letters are sent because the state needs additional information to process a credit claim. The state may ask for a copy of property tax statements, a lease agreement, a form SSA 1099, things like that. Sometimes a schedule of total household income, where you list all your income, is included to fill out and return to the state. If you get this letter, do not ignore it. Follow the instructions on the letter. Another letter that indicates a problem after filing for these credits is the explanation of change letter. This letter is sent by the state because an adjustment was made to your claim or tax return. The explanation of the adjustments is in the letter. And usually these letters say if a person disagrees, the person can submit documentation to support their claim. Things like property tax statements, lease agreements, Form W-2, a Form SSA 1099, etc. If you get an explanation of change letter, follow the instructions on the letter and do not ignore it. And the third letter that indicates a problem after filing for credits is an identity confirmation quiz. The Michigan Department of Treasury suspends processing of a tax return or claims, and it sends a letter to taxpayers requesting information to verify the return claims are not fake. The return of the claims will not be processed until the taxpayer's identity is confirmed. This is the state trying to ensure that returns it gets and claims, credit claims, things like that, that they are legitimate. There's been a lot of tax-related identity theft in the past years, and this is one way the state is trying to ensure that they're not sending out money to scammers and that taxpayers are not getting taken advantage of by someone using their information to file fake claims. If you get one of these letters, do not ignore it. And again, follow the instructions on the letter. I did want to mention that with letters you get, there could be appeal deadlines, and they are very important. If there is no response to the letters mentioned, like I said, usually there's less credit or no credit paid. But if a letter contains a right to appeal, the appeal has to be made within the given deadline. A missed appeal deadline means rights to appeal are gone. This is important. I've had folks come to me, they've gotten a letter, says they have a time to appeal a decision that was made, and they didn't do anything. The deadline's been missed, and the right to appeal is gone. Now, all hope is not lost with the state of Michigan Department of Treasury. If the deadlines to appeal are missed, taxpayers can still write to the Michigan Department of Treasury, explain they disagree with the state's decisions, provide supporting documentation or documents, and ask for the decisions to be reconsidered. The Michigan Department of Treasury may review this decision and voluntarily change it. And generally, I find the Michigan Department of Treasury to be pretty good about working with for these types of requests for reconsideration. But again, if the appeal deadline is gone, you're just asking them to look at information and they can voluntarily decide to change it. You still don't have a right to appeal, but the state might look at everything and say, no, you're right based on what you've given us, and they could voluntarily change the decision to your benefit. There are deadlines to filing the homestead property tax credit and the home heating credit. The homestead property tax credit, you may be able to claim credit that you did not claim in the past year, and you have 4 years from the original due date to make a claim. And this is important. If you have not been filing for the homestead property tax credit for a number of years, you see the information in these slides, you go to the websites and check it out, and it looks like you could have qualified the past 2 years. You can go back the past 4 years and file those claims now. So this could be a substantial amount of money for some folks. If they have all these credits that they could have been claiming they didn't, they could file the past 4 years of claims. If those are paid, that's money in your pocket that you would have missed if you waited. So if you do think you could qualify for these credits, the homestead property tax credit, and you haven't been filing, don't just check the current year. Also go back to at least the past 4 years and take a look at it. With a home heating credit, that credit must be claimed, that credit must be filed by September 30th of the year following the claim year. For example, a home heating credit claim for 2022 is due by September 30, 2023. So you can't go back 4 years for the home heating credit. Generally, home heating credits are much smaller than the homestead property tax credits. So, it's some solace in the limitation there with the home heating credits not being able to go back so far. But I just want to make it clear, particularly with the homestead property tax credit, is that if you haven't been filing and you think you could have been qualifying for this, just take a look at the past 4 years. Now, I just wanted to mention some federal tax credits to be aware of. It's a little bit outside the main scope of what we're talking about, but there is a child tax credit, an other dependent credit, an earned income tax credit, and a child and dependent care credit, which are all valuable, particularly to low-income taxpayers. It's mentioned here that the child tax credit is a tax benefit for each qualifying dependent child. And here's a link that you can go to look at more information about that credit. The other dependent credit is something you may be able to use with the dependents who are not child tax credit eligible. So if you have a dependent who's not eligible for the child tax credit, maybe they're available for a smaller tax credit called the other dependent credit. Here's a link where you can go to and read information about that particular credit. There is an earned income tax credit. This helps qualified low to moderate income people by reducing taxes owed and maybe increasing refunds. I provided a link where you can go and review information on the earned income tax credit. And finally, there is a child and dependent care credit, which helps pay child care expenses needed for a person to work or look for work. It also helps families paying for the care of an incapacitated spouse or adult dependent. I provided a link to the IRS website, which talks more about the child and dependent care credit. I just wanted to mention these federal tax credits so you are aware of them. You can peruse information at these links I provided. You just want to make sure you're getting everything that you are due or allowed when you're filing tax returns. So just keep these in mind. Free tax preparation. So with all tax credits, there are different qualifications to see if you qualify or not. It is, in my opinion, a very good thing to get professional tax preparation when you're doing your taxes. Professional tax preparers know these credits, they're familiar with it, they have software to go through and check all the qualifications, ask you questions that need to be asked, and make sure that you're getting everything that you're owed and not making mistakes. I get a number of people every year that come to me, they prepare their own tax returns in good faith, but they just didn't understand the rules or got confused and either shortchanged themselves or made mistakes and perhaps will owe money back to the IRS because of the mistakes made. If you can get free tax preparation, you can get a professional to do your returns for free. It's a good thing. Some people qualify for this free prep, especially those with lower moderate income, disabilities, limited English proficiency, or those who are aged 60 plus. Look into the Volunteer Income Tax Assistance, called VITA, and the Tax Counseling for Elderly, TCE, programs that IRS sponsors. There's a link here. You can go to it. It provides information on these free tax preparation services, who may qualify, and there are a list of numbers you can get to, locations, things like that. So look into free tax preparation by going to the IRS website I provided here. You can also check out the United Way's My Free Taxes at www.myfreetaxes.com. And thirdly, you can call 211 during the filing season and ask for free tax preparation. If you call 211, just ask for free tax preparation. They'll ask you a few more questions, and if you may qualify, they'll schedule you with a free tax preparer to do your taxes. Now, I should note, with these free tax preparation services, most of them start accepting appointments around mid-January or so. You're going to want to call early in the tax filing season, say middle of January, late January, and try to get your schedules made. If you wait towards the end of the filing season, and you get like around April 15th, many of these free tax preparation sites are booked out. Now they always have, new appointments coming online or cancellation. Sometimes they add extra days and appointments, but I just want to let you know that if you're thinking about this, check out this link, check out myfreetaxes.com or call 211. But if you want to try to make an appointment early in the filing season and get that appointment booked, so you've got it on the schedule to go, because if you wait closer to when the deadline is for filing returns, they might be booked out and you're going to miss your opportunity for this free tax prep. And I also want to note that most of these free tax services are only open during the tax filing season, say middle of January through April, May, but some are open year round. When you call and contact a site or talk to someone to make an appointment, they can tell you what a particular site's schedule is. Okay. Are there any questions on any of the information that we've covered in this presentation? Okay. If not, then I thank you for your time and you have a good day. Bye-bye now.